Hello, this is Raza, and you are in my channel Science Innovation Tech RHT. Today we will be covering the financial principle IFRS 9s. So, what this principle actually guide us? It will guide us about the measurement of financial assets and liabilities. It the objective of this principle is to give us the proper relevance and relationship of the financial reporting, the probability and the effect of potential losses. So this is actually cover this guidance of accounting principle about the probability of credit losses of financial assets or liabilities. So here we will be covering the account receivables in this one, that how we should calculate the credit loss of account receivable. So for that there are 6 steps in which you have to identify some things and it will give you the end results. First of all, uh, you need to have an aging report so that you could have the buckets of your outstanding receivables. So for that there are several software of accounting like ERP, SAPs and QuickBooks. So here I will just give you a little bit overview how to export from QuickBooks. So as I export from QuickBooks, you can go to reporting. From reporting you should come to this receivable section. In the receivable section you should run and then give here the time, the date where you want to. For example, the accounting date is end on 30th June. In financial year you should give like how much credit your company is giving. So you should doing that. After that you have to export your report. So in this case you will get such type of aging report like the one I have exported here. Here these are the current outstanding balances. These are 1 to 90, is from 91 to 180. So I give the credit limits of 90 days, because this company, the data which I have exported, are issuing their sale invoice after quarterly. They are issuing their sale invoice. These are each customer data, how each customer, it's reflect the summary of the customer, how they are paying their bill, their invoices. So this is all about the aging reports. So and the summary of the aging report at the end we are getting, and the total receivable are 30 millions of the company. So how we should implement IFRS 9, that we should know how much of this sale is this revenue, this outstanding receivable, there is a probability of credit loss or provision for a bad debts. For doing this, the first step is that you have a hedging report. After that you have to analyze and collect the receivable buckets. So actually these are the buckets: current 1 to 90, 91 to 180s, and 181 to 270 up to and about 360 and more than 1 years. And these are the total of these receivable outstanding at the date 30th June. So for doing this, the company actually generate total sale invoice, the total sale in the year, that is 48 millions. Actually the company, as I earlier said, they are generated invoice quarterly, so they are getting their receivable on quarterly basis. They continuously getting, and the collection I have taken monthly, because they issue the invoice quarterly but the bill coming in every month. Every month the bill are collecting in the banks. So these are the quarterly bill invoicing that they are issued. Total invoice they are issuing 48 million as mentioned above also. And these are the collection the company are getting each month, and in quarter, in whole year they are getting 40 millions collection. So now to analyze the buckets, these are the buckets I have taken. These are the buckets from 0 to 90, 91 to 180. These are the bucket that I have taken. As for the invoicings of the company, it will depend on the company. If your company giving 30-day credit limit, so you can use 30 days from 0 to 30 and from 30 to 60 and going so on. So these are the collections of the company that actually they are paying. The in past from 0 to 90 days they have collected 8 millions in the first quarters like this one, and going on they are getting 12 millions and 11 millions and so on. These are the cumulated collections. So these are, if we add this to this, it will give us 20. So this is 40, and this is, if you whole we added, this become a total of our sale actually they are generating in the whole years. So these are the collection from here to here, and down is the write-off. How this write-off is coming? Actually we need to subtract from the sale to total sale of the year the collection of each buckets of the period. So this is in first 0 to 30 they have collected 8.4 million. So I will be subtracting this from this, and going on I'll be subtracting from onwards like this. This is the formula which I've written here, and coming down these are actually the receivable which are outstanding for more than a year, so which will be considered as a write-off, that need to be write-off because it will not be collected. So the 800 2000s are the receivable which are more than for 300 360 day, actually for more than a year. We consider these are the default amounts. So on the basis of this default amount, now we are going to calculate our default rate, historical rate, for each these buckets. From the current collections period we need to calculate what the default rate. For that, what I am doing, I am considering this default amount, and then I'll calculate its percentage in each bucket. So from 0 to 90 it is 17%, and going on is 20s, 29s, and for the more than 360 I'll consider that this is 100% will be write-off. So these are my default rate which I have calculated from my historical data which I already have. Now on the basis of this, now the next step, the third step will be different from company to companies, because they will be depend on the company nature of business, how their business is. So people here are taking some companies are taking the unemployment, some taking the inflation rate, some taking the market conditions, and it's depend from company to company the what macroeconomic factors impact your company business and your customers. So here, as this company that I've taken the data, this is public limited companies, and they provided the service to the general public. So for that, I'll consider that unemployment rate will be the major contributors in their default of the customers. So because if the unemployment will increase, so the paying ability of the masses will also be decreases. For that, I'll assume that if 1% increase come in unemployment, it will trigger out the default losses of 0.5%. Now I'm going to find out the write-off for the coming year, that will be for more than 360 days. For that calculation, this is the write-off rate. How this write-off rate is coming? This is the increase in unemployment. In Pakistan in 2022, the rate of unemployment is 6.2%, which is an increase of 1.64% from previous year, from 2021. In previous year 2021, the unemployment rate is 4.35%, and now in this year it is 6.2%, the increase is 1.86%. I earlier assumed here that if 1% increase in unemployment, it will trigger out 0.5% default in my customer, in my receivable. So on the basis of this, now this as unemployment 1.86% increase, I assume that it will be trigger out 1% trigger out 0.5%. So what will be the 1.89% contributed? Actually, it will contribute 0.9% in my default rate. On the basis of this, I've calculated my next year, coming year write-off. The default amount that will generate for more than 360 days is actually 876,000. Sorry. So how I calculated this? I'll multiply the the current historical write-off, the bad debts. So multiply by this rate. So it give us this amount. Now I'll be finding the default rate for this coming year. What will be my default rate? The default rate will be, as these are my from 0 to 90 sales, and this is the losses that I generated from this assumption that it will be write-off. On the basis of this, I created my default rate. So these are my default rate. Now that I find out that from 0 to 90 days, my default rate will be 17%, 20%, 30%, and 51%. This is quite high for this company because this company initially not properly created their provisions for their bad debts. This is actually 5-year data receivable contributing in this company receivable. That's why it's too high. If your company is every year creating the provision, it will not be like that. It might be 2%, might be 3%, might be 4%, because this company never create previously provision. That's why it's too high. So this is my actual aging, which I already taken from my software, and these are the actual one. These are the actual one. So now I will calculate my my provision for this year, the credit loss that is for the year. Now from 0 to 90, my account receivable in aging is 4.1 million. From 91 to 180, this is 400,000, and this is 300,000, and this is 3.4 million, and for more than 360 is 22 million. The total is 30 millions of the receivable. Now the loss rate I've generated here, I find it here. On the basis of this, I'll be found my expected credit loss for this company. So if I'll multiply with this bucket, so it automatically give me this credit loss. Now if I add this, the total credit loss is 25 million, which is quite high for this company because this company never created provision in previous year. So my provision will be, my impairment loss for this year will be 25 billions, and the bad debt provision will be 25 billion for this company. This all for today. I hope you guys could understand it. If you have any problem, you can email me. I can give you proper response when I can share this template with you people. Hope to see you in next very good video.